Calculator. Today, we're going to be going through some live rates, and then we're going to be talking about profit and loss loans. Give us just a second here to go live on all the different platforms. We have the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. Definitely appreciate those tuning in nice and early. All right, it looks like we're live on all the platforms, so we'll go ahead and get it started here. What we'll do is we'll take the chat off the screen for now, but we will go ahead and let you keep dropping comments there as you tune in, and also you can drop any questions you have when we go through our loan type breakdown here today. But we'll go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president Nick Hershey and our sales manager Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every morning at 11 a.m. Eastern on this show is go through our actual live rates, and then we do a deep dive into a different loan type. And today's loan type is going to be profit and loss loans. Now, this is a very popular loan here at the Mortgage Calculator because we specialize in non-QM loans, so something we're very familiar with here. We'll take you through a deep dive into that here shortly. But before we do that, we'll do what we do every morning, which is pull up our rates. So Nick, if you're ready, let's go ahead and pull up today's rates and see what they are looking like.
All right. So some more volatility. Unfortunately, rates are moving like crazy the last few weeks. We will pull up our scenario here across the different programs so we can compare the APR. We will set up a scenario of 500,000 purchase as we do every morning, a 400,000 loan amount, which corresponds to 80% loan to value, 20% down payment. We'll set all the demos to a 760 estimated FICO credit score and an estimated 40% debt to income ratio. So those are our basic settings here. And of course, it's a standard single family home based here in Miami, Florida as the default. For our DSCR examples, we'll use a value of 1.5, which we'll explain when we get there. Now, if you'd like a full itemized loan estimate that breaks down all of the fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. Let me go ahead and share my screen though. And we'll check out today's live rates. All right, typically first up on the list for most of our clients looking for a primary home is our 30-year fixed conventional program. So today rates come in as low as 6.875 for a standard conventional. Final APR 7.185. So APR up above 7 again. We were under there for a few weeks now, back up a touch over 7 on the APR. Hopefully we see some more downward movement today as the markets tend to overreact a little bit. Now, moving on, if our customer, for any reason, doesn't qualify for a conventional program, typically the next option we want to compare is an FHA option. FHA allows more leniency on credit issues, as well as a much higher debt-to-income ratio overall. So typically our customers may qualify for this where they want to qualify for conventional, but the scenario is exactly the same. So for the exact same scenario, rates come in at 6% today. Final APR 6.957, which includes all the upfront and yearly mortgage insurance. So notice FHA hasn't quite jumped up as much, so it's actually a touch cheaper for our customer that qualifies for both. And our customer that needs to use FHA, definitely a great option, as it's very comparable to conventional to still use the FHA programs. Now moving on to our VA option. VA is only eligible for our active duty military and eligible veterans. If you are, definitely a great option. 30-year fixed VA standard option comes in as low as 6.124 today. Final APR 6.427. So notice, as usual, the VA final APR definitely much lower than all of the other options. So great option for our vets out there. And the final agency government option that we have is our USDA option, but that's only for properties that are in USDA eligible areas, typically the rural areas. If the property is eligible and our borrower is eligible, it's a great option here. 6% is the lowest rate option today. Final APR 6.771. Notice when we compare USDA to FHA, which is usually what our customers shopping in those areas will be comparing, USDA is a touch cheaper. Same when we're comparing with conventional. So if our customer and the area qualifies for USDA, definitely a great option to look at. Now, moving on to our non-QM options. Many other banks or lenders only have these standard 4 options. and would have to deny our customer if they don't qualify for any of those standard options. But that's where we love to present our 5,000 additional options under our non-QM programs. So first up is our non-QM alt doc for a primary home. Typically compare this to a standard conventional primary, and we'll be able to use, instead of the standard conventional programs, which our customer may not qualify with, we're able to use bank statements, 1099s, P&L, asset-related programs, all kinds of different alternative documents we can use. Typically, this option here, the lowest option will be typically a bank statement option. So that comes in today 6.999, final APR 7.344. So notice today when conventional jumped, we're actually very close to conventional on our non-QM options, since non-QM doesn't change as drastically on a daily basis. So definitely a great option for our customers that need to use those alternative docs. Still great pricing here, same as yesterday. Now moving on to our investors, 30-year fixed non-QM alt doc option for an investment property. So again, bank statements are similar. Come in today at 7.5% rate, final APR 7.793. So good option for our investors looking to use alternative docs. And next up for our investors, our conventional option. Remember, the government programs, VA, USDA, FHA, do not work for investments, but these standard conventional options do. So our conventional option for investment property comes in at 7.5 today, final APR 7.855. So notice it's a touch higher than our non-QM option because the rates do react quickly on the conventional programs. So they jumped up a little bit from yesterday. So non-QM is actually a touch cheaper. Now, moving on to our favorite options and our most requested programs, our DSCR options. Stands for debt service coverage ratio. With these options, no employment or income is needed. We simply use the estimated rents to determine a DSCR value. If the estimated rents can cover the expenses, aka the property will cash flow, that's a ratio of 1 or higher. We used a value of 1.5, meaning the property cash flows very strongly here for our demo so that we could see the most common options. And first up here is our 3-year prepayment penalty option that is standard on these DSCR programs. And rates come in at 7.374, final APR 7.7. So notice this is beating conventional. Absolutely amazing for a DSCR program to beat conventional. And to sweeten the deal, we can add a 5-year prepayment penalty to make the rates a little bit lower. Rates come in at 7% for this option, final APR 7.342. So really beating conventional by a long shot if our investors are willing to add a 5-year prepayment penalty. And moving down the list here, our final DSCR option. Some investors do not want a prepayment penalty. That's no problem. Just the rates and costs are a little bit higher. Rates come in at 7.999, final APR 8.513. So notice that's a bit higher than conventional, typically. So I would definitely recommend our investors add a prepayment penalty to take advantage of these low rate options. And next up, a very new program, our 30-year fixed second mortgages. So a lot of customers don't want to touch their first mortgage. No problem. We have some options here for a primary home to get cash out of your primary home without touching the first mortgage and without having to do a variable rate HELOC. These 30-year fixed second mortgages come in as low as 9.75, final APR 10.196. And since it's up on the screen, we'll go over it. Our 40-year DSCR option, definitely a great option for our investors looking to maximize cash flow, lower the payment. This option comes in with a 3-year prepayment penalty at 7.625 rate, final APR 7.929. So this one's just a touch higher than conventional, but obviously the payment will be much lower for our investors looking to capitalize on cash flow. So great options here. Let me go ahead and switch our screen up and get back into today's topics. Which is profit and loss programs. So when we're doing our general demo, we don't always get to go into the nitty gritty of each program. There's thousands of programs and options. So Jose will actually dig into our P&L programs here. Definitely a tricky bit of paperwork to get, but if our customers can get it, definitely some easier options here in many cases using our P&L program. Less documents needed overall. But as Jose will explain here, we definitely need a cooperative accountant, tax preparer, EA, whatever you want to call it. So Jose, let's introduce the program and then check out some live options.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. The profit and loss loan is a great tool in our quill, right? We have our full doc, then we have our bank statement. But when bank statement doesn't work out for our self-employed borrowers, the workaround is the profit and loss. It is a solution when your bank statement loans are probably going to fail because of either too many NSFs, too many overdrafts, low ending balances, declining deposit trends, which are some of the more common obstacles facing bank statement loans. But with the P&L, we have options that will require the last 2 or 3 months business bank statements, and then we have options that do not require any bank statements. However, keep in mind, if this is a purchase and you're using the same bank statements for your assets, you are going to be presenting your last 2 months of bank statements. So keep that in mind. Now, the P&L, you will have to look at the guidelines to see, but it's usually going to have to be prepared by the tax preparer or accountant or CPA of the borrower. So make sure that when you are discussing the P&L deal with the borrower, make sure that they do have some type of tax preparer that they're working with, because we do have instances where we have borrowers that just self-prepare their tax returns. They do not have anybody that's going to be able to assist them with the P&L and with the verification letter that also has to come from the tax preparer. If that's the case, then you may be at a guess unless you can find a P&L that allows borrower prepared and then maybe only ask for a verification letter. So that is the key to the P&L program, reviewing the guidelines, because as is the case in all non-QM loans, all guidelines are different. So let me go ahead and share the examples I have with you today, because I have some great examples, very low rates. All right, so 90% is the maximum LTV, as is always the case with non-QM loans, and also never any mortgage insurance applicable on non-QM loans. So our first example here is 90% LTV, primary purchase, and our lowest cost option, 9.375, lowest rate option, 8.499. This is at the maximum LTV of 90%. So now we drop the LTV to 85%, and you see the improvement in the rate. 8.499, which was the lowest rate option at 90%, now becomes our lowest cost option at 85%. And we can take the rate down all the way to 7.374 at a cost of 2.375. Now, I always like to state that this is regarding compliance points and fees test. So this would be the lowest compliant rate without any seller contribution. However, if you do get seller contribution in the deal, that seller contribution can be applied towards the loan discount, and then it would be excluded from the points and fees test. So you could certainly then buy the rate down lower. Now our 80% LTV option, 20% down, the rate gets even better. 7.75 is our lowest cost option, almost at par. And you can buy that down all the way to 6.875%. Pretty amazing. Now, wanted to show you our low credit score option. We can actually take it to 75% LTV with a credit score as low as 600. Yes, that's not a typo. That's 600. So 75% will yield us 10.999, lowest cost option, almost at par. And we can buy that down to 9.875 at a cost of 2.375 points for our 600 credit score, 75 LTV primary purchase. So let's get into some investment options out there. Max LTV for an investment loan using P&L is 85%. And here with a 3-year prepay, the prepay definitely aids in bringing down the rate. When talking about prepays with your borrowers, always talk to them about the difference, right, in the payment as well, because they are going to be benefiting with that lower payment. Should the prepay be executed in 2 or 3 years down the road? In this case, it's a declining prepay, right? So it's going to be less, and possibly the benefit of having that lower payment for, let's say, 24 months could meet or exceed the prepay. So just keep that in mind, because it's not an absolute that the property would be sold, right? So but you definitely do get a benefit from the prepay. 9.124 is lowest cost option at par, and you can buy that down to, oops, see, I was missing a couple of columns there. 7.499. Now you do know that in the investment loans, the borrower can pay more fees, because we can go up to 5% instead of 3%. So now to show you the 5-year prepay benefit, same deal. This is 85% 3-year. Now 85% 5-year, the rate drops by 0.25%. The rate drops by 0.25. So now you get 8.749, almost at par. And you can buy that down all the way to 7.249 at a cost of 3.25. And this is for an 85% LTV purchase. And now the 80% LTV purchase with the 5-year prepay, wow, look at those rates. 7.9, excuse me, nope, that was a typo. That should be right there. 7.499 at a cost of 0.625, and you can buy that down all the way to 6.499. That is correct. That was pretty amazing. I was pretty shocked when I saw that. 6.499 lowest cost option. You see how much better the rate got when you added the 5-year prepay as opposed to the 3-year. Here on the 3-year, our lowest cost option was 7.249. And here on the 5-year, it is 6.499. Actually, sorry, this is 80%. My bad. That's why I got a little bit better, but 80% with the 5-year prepay, 6.499. Now, obviously, 80% is the more common. Oh, I think I'm frozen. Let's give it a minute. 80% is the more common LTV for this option, hence 6.499. And now our P&L investment purchase with a 600 credit score, right? We have 75% LTV is still possible with a 600 credit score, which is amazing, using profit and loss reports. 10.875 is almost at par, lowest cost option, and you can buy that down to 9.25% at a cost of 3.375 points for our 600 credit score. 75 LTV, only 25% down with a 600 score. And our last 3 examples here are cash outs. Profit and loss primary cash out. Maximum LTV is 80% on the cash out, but amazing rates. 8.125 is almost at par, and you can buy that down to 7.125% rate. Pretty amazing for our profit and loss primary cash out. Now, our investment cash out also at 80%. But now, notice, even though it's investment, since we are adding a 5-year prepay, our lowest rate is now, and since we can go a little bit higher in the cost to the borrower, our lowest rate is now 6.875. Wow. So lowest cost option, 8.125, Lowest rate option 6.875 for 80% LTV 5-year PPP. And I can guarantee you that's blowing the socks off of full doc conventional on a cash out. And our last example here at a 70%, that's 70% LTV with a 600 credit score. Again, our lowest credit score option. I did this one for an investment, which would be typically the highest risk loan, 5-year PPP, and still amazing rates considering everything that's involved here. 10.625%, almost at par. And you can buy that down all the way to 8.999 at a cost of 3.375 points. And again, keep in mind, this is for a cash out refi investment with a 600 credit score with a 5-year prepayment penalty. So again, some amazing rates shown to you today on the P&L loans. They're not only to be used as a solution for a bank statement loan that went sour. Just keep it in mind, depending on the document that your borrower can provide, is why you would either use a P&L loan or a bank statement loan.
All right. Thank you, Jose. I actually do not see any questions in the chat right now, but definitely amazing options there. So no questions came in. So we'll go ahead and wrap it up then. Remember, everybody, we do this at 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a different loan type. So we'll be back tomorrow with a new loan type to talk about. We appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates